Hi, I'm Taylor Lapidus with the Precision Team, Keller Williams, Arizona Realty. Now, the tax credit has been extended to September 30th, and the people that made it under the wire back to April 30th, getting a contract in place that qualify for either the first-time home buyer or the move-up repeat 6,500 credit, 8,000 for the first-time home buyers, they're going to get tax credits, cash, basically, money that they're going to be able to hang on to immediately. And we saw a big push. We saw the increase in sales right before that deadline of April 30th came, where people were out looking at homes, getting under contract, a lot of competition. This is a buyer's market. There's supposed to be more sellers on the market than buyers, but there was a lot of competition. Every well-priced home had multiple offers immediately. And now, there's a bit of a lull. Okay, the tax credit's over, but rates are amazingly low right now. If you go to bankrate.com, you can look at an average for your area. The national average, they're saying, is 4.75% today. 4.75%. That's a really low rate. Now, not everyone's going to qualify for that. It's going to be based on your credit score, debt-to-income ratio, monthly payment, tons of different factors. But a base rate of 4.75%, that's low. Back in the 80s, there was double digits. And that's why there was a lot of different things that happened in the 80s and are happening now. But the point is, low rates are not always going to be around. So I did a quick snapshot. What does it really mean for there to be a change in mortgage rates in terms of dollars? If $8,000 tax credit is going to get people off the fence and get people moving, what if rates were going to go up by 1 percentage point? So if they're at 4.75% now, and now again, not everybody's going to qualify for a 4.75%. You need to talk to your mortgage expert. The point is, the baseline 4.75% according to bankrate.com versus 5.75%. Over the life of a loan on a 30-year fix using $400,000 as the mortgage amount, now you'd have to put down payment above that. But $400,000 as the mortgage amount, 30-year fixed, 4.75, that yields a total interest payment over the full life of the loan of just over $350,000. That's separate than the principal of $400,000 that you still have to pay back. That's just interest, $351,000. That's how mortgages work. Banks make a lot of money on these. The monthly payment would be $2,090, just under that, $2,090. If you look at that same $400,000 mortgage, 5.75%, and I'm just using an amortization schedule from bankrate.com. You can find them at any number of websites. Google amortization schedule. They calculate every month, every payment. They show you the interest as it goes up, the principal as it goes down. Pretty useful things. You should look at it if you haven't. 5.75%, 1 percentage point increase over the life of the loan. You're going to end up paying $90,000 more in interest. Again, that's above and beyond what you're paying in the principal. So that's $440,000 in interest payments alone. The monthly payment is $2,334.29. Okay, so the difference in the monthly payments, $247.70. How long would it take making an extra $247 payment per month before you've reached that $8,000? 32 months, just over. Which means that 2.69 years, around 2.5 years, you can expect that $8,000 tax credit to be eaten up just in the monthly payment, let alone in all the interest payments over the life of the loan. So it's interesting how the $8,000 tax credit got people off the fence, and you see a lot of activity, but rates are at record lows, and we're not really seeing as much activity as a result of it. Now, they've been hovering low for a while, and maybe that's something that people feel it's going to be here for a long time. Prices are low, and again, they've been low and coming down for a while, so maybe people think that's going to be around for a long time. It's just interesting. I find it interesting. I also think maybe it reflects a little bit of our society's kind of mentality. The bigger picture being that this credit now and pay cash later kind of thing has been ingrained in our society. It's created a lot of the problems that we're having now, and maybe is that what we're seeing now? Hey, $8,000 cash versus $90,000 over the life of the loan. Well, that's the life of the loan. That's only $200 a month. I can finance $200 a month and get everything now. I'm going to take the cash. Well, maybe that's what's going on. Maybe not. What do you think? What's your opinion? Do you think that the low rates are here to stay for a little while? Or do you think it's worth taking advantage of? I don't know. If the tax credit got you off the fence, why aren't these low rates? Just curious. That's not to say that there's not a lot of buyers out there. There's still competition on homes. I'm just kind of feeling this vibe in the market that there are fewer buyers out there right now than there were for the tax credit. That did bring in a wave. I'd love to hear your opinion. Please, let us know. Leave a comment below. I'm Taylor Lapidus. We are the Precision Team. Thank you very much for your time. Have a great day.